People ask me every hour of the day, are we at the bottom? Is it time to buy? And we're not. And the reason I say that is, let's just talk crypto markets, all crypto markets. I don't care what asset class you're in within crypto markets, what coin, what token, what asset, what project. I don't care. It doesn't matter. We're not at the bottom yet. What defines a good bottom is a panic event. Now, we've had some good bankruptcies, but they're all small. You know, yesterday's announcement, Voyager, it's irrelevant. It's so small and so decentralized in the sense that the shareholders are all over the place. And it's not really going to hurt anything. So it doesn't bring the panic bottom that you need. What defines great bottoms is panic in the streets, massive capitulation, massive selling, massive volatility, and then you flush it out. That big toilet in the sky has to flush. It's coming soon. I feel it coming. Somebody's offside, somebody's over-levered. These small guys going to zero just never knew how to manage risk because they'd never experienced anything like this. Now, the good news for them is they've learned. Learn, grasshopper, learn. Don't leverage yourself up like that with an asset that you can't ever peg the bottom on. So they got wiped out. So what? It's a great learning experience for them. They'll be much better managers going forward. And the shareholders, chalk it up to entertainment, no different than going to Las Vegas. You took that kind of chance with leverage, you got wiped out. Learn. That's the whole point. But the big event hasn't happened yet. It's coming to a theater near you shortly. I don't know who it's going to be. Somebody's gnashing their teeth right now. Somebody's way over leveraged. Somebody's trying to borrow cash. And tomorrow morning, you might find out who it is. I'm looking forward to that one. That's when you go back into the market, when it's absolute panic in the streets. And it will happen. You know, we're still not at the bottom there either because P's are still a little expensive. I anticipate if we could get down to 15 and a half P on the S&P, then you can cherry pick the top 100, highest quality balance sheets in the S&P 500. And that'd probably be a good place to put some money to work. And you'd be layering in. Nobody knows about the recession. It's pretty hard to have a recession of full unemployment, full employment. I mean, we don't have, any. This is not your typical recession, I can tell you that. I haven't even seen any results yet of private companies I've invested in slowing down at all yet. We can't even hire anybody. So we're in a different kind of time right now, and we'll have to see where that goes. But in crypto, you get a lot more volatility. And, obviously the granddaddy asset is Bitcoin. It's holding its own at 20,000. But if you saw that spike down in a panic sell-off, that somebody had to off their coin because they're, being margin called out, and that thing dropped to 15,000 or something, that would be a good place to start putting money to work in again. And I'm not saying it will or won't happen. It's just we're not at the bottom yet. Of that, I'm sure. And so you gotta, hold your nose and wait and see what happens. And in the meantime, if you have a position, as I do, you just ride it out. I don't use any leverage in crypto, zero leverage. So it can go to zero and it doesn't wipe me out. Crypto is not leverageable yet. It needs to have policy and needs to be regulated. And then the volatility will go down. Then you can put on some leverage to goose returns. The guys that put on the leverage are wiped out. And every day you hear another story, wiped out to zero. A lot of these companies are going to face bankruptcy because they levered their Bitcoin mining, borrowed money to build more facilities, and they're offside 50, 60% plus leverage. But the bigger problem, Pomp, is this. Let's say you want to raise new capital, because I'm in the mining business and I want to let's say you're going to do a 300 megawatt facility in a friendly state like North Dakota or Montana or South Carolina, where you can get power. You can get a plug-in for less than 4 cents a kilowatt hour, which is what you need to be globally competitive. You have to find a power source behind the meter. In other words, where you can prove to someone that you are compliant from a carbon perspective. And that really points to nuclear power and hydropower. So all of a sudden, places like Northern Norway, where we have a facility being built in a company called BitZero, we're behind the meter. Every electron comes from a giant hydro dam, no need for a carbon audit. And we're able to raise money because the institutions that provide the funding, whether it be debt or equity, understand there's no risk. Take any other public miner, ask them where their power comes from, and they say it's blended. They don't know, basically. And that's the problem the existing miners have. In a way, they're kind of screwed. But I think a new generation of miners emerging. I'm not the only guy doing this. There's other funds out there that are basically finding hydro and nuclear power and regenerating this industry from scratch at a carbon zero footprint. It's not just Bitcoin mining. It's Ethereum. It's any data center. This is going to be the issue going forward. So the older miners, their stocks are down 70 to 90%, not coming back. There's no question about it. What if there's excess power? There's no better way to store the value than mining. There's no better way. And so the mining industry, which has taken such a bad PR, extremely bad PR in the last 6 months, it couldn't be worse. It's getting accused of every disease known to man. They're actually doing something very important. They're advancing technology and mining technology and semiconductor technology and heat technology every generation. Every 36 months later, there's a new technology that's more efficient in terms of mining, which is a good thing for everybody else. And also, they're taking excess power. Let's go back to Norway. In the 50s, they built so much hydroelectricity that over half of it's never used. It goes over the dam and it's never used. Now with Bitcoin mining, these miners can go into those communities and create jobs, data centers. Excess heat is doing hydroponic growth there because they're in basically an Arctic climate, and storing value by creating Bitcoin, paying taxes. In Norway, they don't get thrown out of the country. They're embraced by the government there because they see the imputed value. Look at what happened in New York. All of that power going over Niagara Falls is being wasted because no Bitcoin miners can set up there. The government's gone berserk and chased all the capital out of there. In fact, that Norway project started in upstate New York, and after the government went wonky on policy in that state, moved all of the mining facility to Norway where they're accepted. So there's a lot of differences between policy in different states. You've got to go find the ones that are willing to embrace the concept of mining for the reasons that it has merit, which is basically to store value in unused power. Unfortunately, for Biden and the administration, there were some policy mistakes made early in the mandate over 2 years ago, particularly around energy. There's two pressure points that are causing all of this political activity. One is inflation on energy. $5 to $7 gasoline per gallon is just a killer when it comes to midterm elections. There's no getting around that problem because people see that every time they fill up their truck or car. And then, of course, protein. The food supply chain in the U.S. from chicken on down is up between 30 and 48%. So food and energy are very political in nature because you're forcing families to spend so much more of what they make on things that they never had to worry about. Now they do, heating their homes and just feeding their families. And so it's very difficult to reverse the mistakes made in energy. Let's start there. Canceling the XL pipeline, canceling leaseholds on federal land, shutting down offshore development, canceling the activity that was going on in Alaska, which was very prolific in terms of providing gas and oil, really making it hard to figure out carbon costs if you're using any kind of fracking service. And so all of a sudden, of course, we're no longer energy independent. We're in a perverse situation that even before the Ukraine war, we had Russian tankers coming into the Boston Harbor. So that's policy mistakes, and takes time to fix that. When Biden goes over to Saudi Arabia to get more oil from them, it won't matter to energy prices in the U.S. because we don't have enough refinery capacity. We just canceled another refinery. We need 3 more. Again, bad policy. Now, where this is going to manifest itself in a very ugly way is at any midterm election, the incumbent loses seats in the House. I fear for Biden's administration a complete slaughterfest in the midterm election. Everything's going to turn. It's going to be brutal. And I think, what do you do? What can you do? If you want balance, You're not going to get it here. There's going to be a lot of seats lost in the Democratic Party. And in a way, they did that to themselves on bad policy. And of course, they're scrambling, and anything can happen between now and the fourth quarter. But I'm not optimistic for him. And, you know, he was given a mandate to solve for the pandemic. He did a reasonably good job there. But this energy policy and what happened in inflation caught him off guard. And I'm not sure what can be done to fix it, because it's not getting better anytime soon.